What's your morning routine like? Are you a big, California hippie with the morning routine? You got to sun your balls or something like that, bro. Like you're laughing because there's some California guys that are on that shit. What's
Oh
your
yeah.
what's your morning routine? Because I'm sure people are wondering, like, does that actually play into success in this business?
I can't believe I figured out the infinite money glitch. This is great.
Right.
And then secondly, realizing shortly thereafter, after blowing an account of about 80 grand in 2 weeks from there, those orders are coming out. And then when there's big lots spitting out and then they're kind of hesitating and get up to an area of price and all of a sudden we run out of buyers and nobody wants to buy it anymore. And then all of a sudden you start to see these sellers cascading in and you get that account pumped up to, let's say, $500,000 balance. And this is not like $500,000 prop firm balance. This would be actual $500,000 cash and equity in your account.
Yep.
You could potentially in the Globex session make a market or bully people around.
What up, boys? This is a good one. That's all I've got to say, man. Rips is in the building and he is here to rip faces. He's going to share a ton of valuable insights on futures trading. We hear his story, which I feel like he doesn't share enough. It's a good story. His background, how he got into trading, his previous success, and how that has translated into him becoming not only one of the most popular traders on the internet, but specifically one of the most popular guys with Topstep. So if you're a futures trader or you're looking to get into futures, you are going to love this episode. The Day Trading Show has a couple of sponsors. You're going to hear from them in a second. We've got links for them down below. I really appreciate it if you use those links. It helps us keep this show going. We're going to do more in-person episodes. Trust me, I've got a ton of exciting interviews coming for you that you don't want to miss. Controversial, exciting, entertainment, and of course, packed with value. So we appreciate you. Make sure you're subscribed. And now here's my conversation with the man himself, Mr. Rips. All right, boys, I'm finally excited to share this information. The free futures course that I've been working on the last few months is finally ready for you. There's a link in the description to grab this course. Again, it is totally free. All I ask is that you leave me a review. I can see everybody that takes the free course. If you don't leave me a review, I'm going to come kicking your door down and asking you for that review. Because in my opinion, and this is what I'm hearing from other people, you're going to watch this and you're going to say, why is he giving this information out for free? Well, I'm giving you the strategy that has helped me and other traders in our group get funded and get paid out as futures traders because I don't believe strategy is the only component to getting paid out. It is an important factor in your overall success, but it is not the only factor. And I think that out of all the factors that lead into successful trading, strategy should be the one that you almost would say is the most simple. So I want to give you a simple strategy that's proven to work not just for me, but for other traders. And then I want to help you push yourself to get funded and get paid out. And that's what we're going to do with this free course. So check it out. There's a link down there. Just make sure if you watch it, you leave me a review because I'll come asking you for it if you don't. I really appreciate all the feedback, all the attention you guys always give me. I'm just here to help you guys make more money as much as I can. So enjoy the course and now enjoy the rest of the video. What's up, traders? Welcome back. We are in the building with the man who might have a better beard than me. Maybe. We're going to have to let the audience decide, Rips. It's good to have you on the show, man. And I'm honored to have you, happy to have you, and excited for this conversation. So,
oh man, thank you so much for having me, Austin. I really appreciate that.
Dude, absolutely. So I saw on your Instagram that you have a cat. How many cats do you have?
I have two Bengal boys. They're brothers. And I love them. Love them to death.
Sick. So are the Bengal cats the one you have to feed like the chickens to and they like rip up the chicken and they do the whole thing?
Yeah, they don't actually eat live chickens, but we have a service where they actually cut up, live raw meat and then we get it shipped to us. And yeah, it's like freeze dried and it comes in a dry ice container. So yeah, they eat raw food. They're like little miniature dogs in a way. They're actually clicker trained, believe it or not.
That is awesome. So I have two cats as well, two tabby cats. So we're similar there. Similar beard, similar cats, similar. But my cat is not clicker trained, but he still will play fetch and he acts like a dog sometimes. So
that's awesome.
It is funny because like I'm sure when people meet your cats and they like act like dogs, people are like, this is weird, right? Because normally cats are very standoffish and stuff. So it's funny you got them trained like I do. So it's cool.
Yeah, that's awesome.
So let's get into it, Rips, because I'm sure the audience is excited to hear from you and kind of get to know you a little bit, because I feel like you're not a frequenter of the social media zeitgeist. You know what I mean? You kind of avoid the drama, you avoid the BS, you stick to your streams and your value. And I applaud you for that. I commend that. Is there a reason though? Is there a reason you kind of aren't in the mix as much? Do you just try to dodge it and do your own thing?
I've never been a big fan of being on social media whatsoever. I've never been a big fan of that. I actually was not on, I've never really been on Facebook. I've never really been on LinkedIn. I've never really been on any of these social media platforms. So it's definitely newer to me. I did start to do my Instagram probably back in September of 2023. So we're going on deep in about 6 months now. And that's conveniently when I started doing my streaming as well. So been on YouTube, Twitter, and Instagram now for a very limited amount of time. But yeah, I don't really get wrapped up in it. I'm a little bit older, so I don't really get wrapped up in the whole Lamborghinis or the Ferraris or doing any of that kind of flexing on Instagram or anything like that. I try to keep it low key, and I enjoy, the what I'm doing on those social media platforms as is.
Yeah, I love your content. It's consistent. It's clean. You give enough information with, like, you do your daily hikes and your outdoor activity. You do that stuff while still showing your trading and making that the focus, which is the same thing I try to do. I don't want people to know the house or the car, right? That doesn't make you a better trader. Newsflash for everybody, right? And if you see this when you watch the episode, you'll read the description. I say there's no, rented Lambos and fake Rolexs allowed on the day trading show. So you passed the test, and that's why we're here today. So it's good.
I love that.
So, real quick, let's do like a little catch up. When did you start trading? I know you just said you started streaming and kind of coming onto social media in September of last year. When did you start trading? When was the first trade placed, and what brought you into trading from your previous business experience?
So yeah, great question. I started trading about 10 years ago. It's been a decade of experience. And I was, I've been an entrepreneur my whole life. And I got started trading because one of my buddies was day trading and I had no idea. I've always been obsessed with stocks and everything ever since I was younger. I grew up super poor, didn't really have access to any kind of funds to do any kind of investing when I was younger. Didn't have like a stock portfolio that I got to grow up with or anything like that. But I did track stocks in the newspaper, and it's dating me a little bit, but every single morning it'd be part of my routine. When I was a younger kid, I would go into the newspaper and start picking stocks and look at where they were. And, I'd have my own kind of portfolio in a notebook, but nothing digital or anything because I was too young.
Wow.
And it didn't exist. It didn't really exist. So I'd track stocks in the newspaper and I'd keep track of a portfolio. I'd track like Nike and then IBM, some older stocks. And I was obsessed with it. I really, really loved investing. I loved Wall Street. I loved the whole idea of it. I loved the movie Wall Street growing up. And yeah, it was just, one of those things where I was really, really obsessed with it. And I never really knew. I always thought that you'd have to have some kind of license, or you'd have to go through a brokerage or a broker to invest, not by your own direction, but you call your broker, they pick some stocks for you, and et cetera. I never thought that you could do self-directed investing without some kind of license. And so, it was one day I was in my office and my buddy came through and he showed me TD Ameritrade. This is back in 2013 or 2014. Showed me TD Ameritrade and I was hooked. He showed me that you could be day trading. And how I got started was on a pair of ETFs. It was JNUG and JDust, a triple leverage ETF that tracked the gold miners.
Wow.
And it was really cool. I was enamored by it. And, I caught the bug because I got really, really lucky early on. And he showed me, you buy JNUG when the miners are up, you buy JDust when the miners are down. And I'm thinking, this is the easiest thing in the world. It's like a game of roulette. It's red or black. And, you can kind of track this stuff because if it's trending up, you just hop on the one that's going up. If it's trending down, it's going down. And the first week I traded, I had a day where I made about $26,000 or something like that in one single day. So that being my introduction in the first week that I did this was probably one of the best and worst things that could happen because
that's what I was going to say.
Number one, it made me feel like, oh, this is the easiest thing in the world. I can't believe I figured out the infinite money glitch. This is great. Right. And then secondly, realizing shortly thereafter, after blowing an account of about 80 grand in 2 weeks from there, I realized that, it's not as easy as I once thought it was. And there goes all the money that I put in that account. But I got hooked from there. I got completely hooked and I thought it was one of the greatest things of all time, especially since I'd been so obsessed with stocks and investing. And it started my journey into trading. It was about 10 years ago now.
That's awesome. What's up, traders? Before we keep going, really quick, I want to thank Topstep for being the sponsor of this video. If you're looking to get funded in the futures world, Topstep is the #1 choice for like 35 different reasons. And instead of me listing all 35 million different reasons for you in this quick clip, I just want you to use the link in the description. Maybe it's flying in over my head. Go to their website, see how cheap their challenges are, see their FAQ so you understand their scaling plan and how you can actually get paid out with them. See it for yourself. Don't take my word for it. But everybody that we have sent from the CFD world over to the futures world, we've pushed them through Topstep and no one is complaining. So whether you're already with Topstep and you're looking to buy another challenge, or maybe you're with a different firm, maybe you're not even trading futures at all, use the link, check out Topstep, you won't be sorry. Now let's get back to the video. Did you stay friends with the guy that got you into trading? Or after the 80K torch, did you say, I'm cutting this guy out of my life for good?
The account was I started with about 50 grand in the account, and it took me about three or 4 weeks to lose the account. And at its peak, it was at about $80,000. So I lost all the money that I put into it. Still friends with the guy, but I definitely made some profits in the account. But I wiped out the entire account, and it was because I had that misplaced confidence. Because that first week of trade, the thing is that people don't really understand when you first start trading, you have no idea what's going on, and you make no mistakes that you know about because you don't know of these mistakes. If you've been trading for 5-6 years. You don't have any idea that, oh, you shouldn't be doing this, you should be doing this. And it just so happened with luck that I was doing all these things, like putting on a lot of risks that I shouldn't have been putting on. And I got really lucky in some trades. And I think, like I said, my biggest day was close to $30,000 in that account. So I had no idea what I was doing. I ended up getting lucky, but it totally hooked me in, got me the bug. And before you know it, I was reloading and trying again. And so began my long journey of trading.
And were you working at the time? So was this like a part-time thing?
Yeah, so I had a couple companies at the time. I was growing brands at the time as an entrepreneur, and I was trading out of my office. I literally I'd come into my office and I'd start trading, midday. And, I'd have some success, but mostly failures. And after that first account was blown, I started to pump the brakes. I wasn't looking for, big 5-figure days. I was happy to make a few $1,000s if I could in a day. But that certainly wasn't the first or last account that I blew. And that was it's definitely the beginning of the journey, so to speak.
So do you think that every trader has to blow an account in order to learn the pain or touch the stove, so to speak, before they can be successful? Have you ever met someone that has not torched an account? Because I haven't.
Well, I think that if you haven't blown an account yet, you've probably not been trading for long enough. I mean, it's one of those things that I agree with you 100%. I think that if you haven't blown an account before, you probably haven't been doing it for long enough. It's not to say that that should be your goal. Of course, your goal should never be to blow an account, but I think it's definitely a rite of passage. I think that most of the larger traders that I've spoken with, I haven't met a single one that hasn't blown an account. And I think that you have to go through that to build that emotional fortitude, and you have to understand what that pain feels like. Like after I blew that account, I mean, it was devastating. And I realized I don't ever want to do that again. Obviously, it wasn't the last account I ever blew, but it created, obviously, okay, let's pump the brakes. Let's bring it in a little bit slower. Obviously, you don't want to swing for the fences. And, it started to shape me as a trader. But like I said, it certainly wasn't the last account that I blew. And it's definitely a rite of passage as a trader.
Did any of the business skills that you were learning or applying to your brand building endeavors translate over to trading? Or was it like once you went through those first blown accounts, was it like, all right, I got to rewire my brain completely here because this business is just different?
Yeah, it's interesting. So a lot of the companies that I had built, they relied a lot on spending money in advertising. And so when you're spending money in advertising, you're looking at money as a tool. So bringing over that skill set of looking at money, not so much as a way to survive, but as a tool to get further in business, that was a really nice translation going into trading, because money is a tool with trading. It's your weapon of war in trading. And if you're going into trading where you're very desperate for cash, you're not looking at it as like, with some folks out there, they may be looking at it as it's a means to survive. And with me, I was blessed enough to have been successful in life at the time where I was using money as a tool in advertising, and I was able to, spend on advertising campaigns for some of my brands, and using that money as a tool translated very well to using it as a weapon of war in trading. So that would say, I would say would be the number one thing that translated over from my businesses to trading.
Those businesses where I have a buddy in my networking group, his name is Pat, and he has a supplement business. So he does the same thing where he's making a ton of money. The margins are very tight, but he's dumping a ton of money on to the advertising side of it. And I think he sees it the same way. Money is a tool. And I think that is it's an amplifier, right? The more you spend on ads, the more we should do in sales, hopefully, right? Unless Facebook decides to pull some funny shit, which they do sometimes. But I think that is actually a strength in trading, to see money as a tool, because what it sounds like is you came from a perspective of not being in survival mode. And a lot of people start their trading career when they are still in survival mode. And that often doesn't allow you to see money as an amplifier or a tool, because you're just thinking about rent this month. And I think, I want to ask you, are those the people that you find they struggle longer because they haven't gotten to that, they haven't gotten out of survival mode, so it makes it tougher. Whereas if you are already out of survival mode, it's easier to pick up trading because you kind of get money.
Yeah, I agree 100% because, I mentor a lot of people in my group Market Clubhouse, and I mentor a lot of folks, and I caution every single one of them that if you're trying to go full time in trading and you don't have, number one, if you haven't proven consistent profitability, that's a number one red flag. You should never be doing trading full time until you've proven consistent profitability. But number two is that if you have some kind of job that's supplementing your income that you're spending on trading, whether you're doing prop firms or funding your own account, you need to have some kind of supplementary income that's taking care of that before you're making the leap into trading full time. And, you notice there's a lot of, ex-professional poker players who looked at money as a tool that have made their way into either prop trading or regular trading. Yeah. And they're doing really, really well with it. It's folks that can understand that where you have to spend money to make money are doing well versus those folks that are in survival mode. And especially those folks who are, if they're dropping everything, I'm going to quit my job and I'm just going to start trading. Those are the folks that are feeling it the worst, in my opinion.
I totally agree. And it's unfortunate. And I've had people that have done that and had to go back to work and do things like that. And that's a tough position to be. But then it also, as much as it is, like I said, tough, it actually will weed out people that are maybe don't have enough determination. They don't have enough of that grit to say, all right, I'm going to eat my ego, get this part-time job while I figure this trading thing out. Not, oh, I can't figure out trading, so I'm not going to do it because I can't quit my job and just jump all into it. You know what I mean?
100%. And those folks are leaning more towards the desperate side of things. And a desperate trader is one of the worst traders to be. If you're trading with desperation, you're trading things that don't even exist on the chart or whatever you're looking at, the asset class that you're trading. You're instead trading everything that's in between your two ears that doesn't exist in reality. And that's one of the worst curses of being a trader starting out, in my opinion.
Oh, we just got out of our mentorship meeting talking about how that's in some ways that mindset is actually a terrible mindset, even just for life too, not just in trading. You know what I mean?
100%. Yeah.
So
100%.
We were trading ETFs. When did you transition to futures? Give me a short timeline on that. How did it go from ETFs with the gold miners to today where we see you crushing futures?
Yeah. So, I started futures very, very early on as well. And I actually started trading on NinjaTrader back in the day. The very first futures platform brokerage that I ever traded on, the very first one before NinjaTrader was TD Ameritrade. And that's how I got started because the original brokerage that I used was TD Ameritrade, and I used Thinkorswim. And on that, the funny story is that I wanted to trade futures. I didn't really know what it was. And I was trading a lot of different equities, right? I wasn't even trading options at the time, but I was trading a bunch of different equities. I didn't know what a contract was. But then I think I stumbled. It was either on the S&P or the NQ, the NASDAQ. And I remember I put on one lot and I saw that it was moving very little. The amount of money that was fluctuating was very, very little. There wasn't a big price movement going on. I think it was probably in the Globex session or after hours. And I just remember that it wasn't moving all that much. And I go and I try to click on to add another lot and it says you're restricted. So I call the desk, the trade desk, and I say, hey, I'm restricted on this. I want to buy more than one share of this NASDAQ thing. And they're like, okay, how much do you want? I was like, I don't know, 200, 500, 1,000 shares. And the guy just laughs at me. He goes, do you know what you're trading right now? I said, I'm trading the NASDAQ. I want to trade a lot of shares of this thing. He's like, okay, first of all, they're called contracts. Second of all, I got to limit you on this because it's clear that you don't know anything of what you're talking about. And you're supposed to fill out this thing to be able to get an addition into the amount of contracts you can trade. So I think he let me trade, 5 or 10 contracts. And then I think I had immediately losing $10,000 in that session.
You were trading minis at the time.
Yeah, E-minis, E-mini NASDAQ.
So micros probably weren't out yet. Micros are new.
That's probably correct. Yeah. So I remember it's I got an increase to 10 contracts and then I sized up to 10 almost immediately after I got off the phone because I wanted to see if it worked. And hey, it worked great. And I blew $10,000 in that afternoon. So it was that's why he was trying to restrict me. And so, it was again, one of those things where I had no idea what I was doing. I had to touch the stove, feel how hot it was, and it burned the heck out of me.
I'm just curious, which platform did you prefer? NinjaTrader, TD Ameritrade?
NinjaTrader by far. TD Ameritrade is great, by the way, especially for options traders out there. Yeah. I did trade options for a very long part of my career. But yeah, TD Ameritrade is a fantastic platform. But for futures, the execution and the speed that you get on NinjaTrader is what I thrive on.
Definitely. And then I guess the next question would be, when did you meet the guys at Topstep? How did you get introduced to the futures trading with the prop firm? Because they've been around for a good chunk of time too.
Yeah, it's a funny story. They recently, within about a year and a half, they introduced their one step, one rule thing. And I had actually stumbled across them on social media when they had their two-step program. And I remember I signed up for an account and then I was looking at the rules and I said, I don't know. I'd rather just be trading my own capital right now. And it wasn't until they had the one step, one rule change where I started getting interested in them. I started trading on them in July of 2023. I tried some other prop firms because everybody in my mentorship group started to really take an interest in futures and especially prop firms because the barrier to entry is so low.
Right.
And I said, okay, yeah, I used to trade futures. I'll trade futures with you guys. And we went from trading index options to primarily focusing on futures. And like I said, we tried one of those other prop firms at the time, and they just didn't have the best rules. So then we transitioned over to Topstep, and everybody really had a great experience with Topstep. So I started trading on with them in July, and I had a lot of success. I did really, really well with them. And before you know it, I started reaching out to them, and they started talking about this Topstep TV thing. And then one thing led to another, and before you know it, I was on their program.
And now here we are today, right? I mean, so it seems like a lot of this has kind of happened, at least on the social side of it and the publicity side in the last 2 years, really, for you,
Yeah.
right? Or moved over to Topstep, got out of the options, so to speak, and as a focus, moved into the futures on the prop side. So it's good to hear that, because I think a lot of people would look at your trading and your overall trading experience and be like, oh, this guy is miles ahead of me. Well, when you hear that, everybody, it's not really the case. I mean, you have a lot of experience, and you brought that over to Topstep, but I'm sure there was still a learning curve when you came to Topstep and were trading with other people's money instead of your own money. So your perspective on it now, I'm curious, do you see, for a new trader, should they be coming in, do you think, with their own capital to really feel it? Or do you think it actually is a pro that they can come in with such a low barrier to entry and get into a simulated market condition?
That's a really good question. And I actually get this question quite a lot. I get this question in my group or on my morning live streams. I get this question all the time. And I caution anybody, you should not be using your own money. You should be starting with a prop firm. Number one, the barrier to entry is so cheap. And if you are successful, I mean, you really can't beat it. On Topstep, you essentially pass an account that costs you $149. You then go into an XFA, you pay $149 for that activation fee. On your first payout, you get that $149 refunded. So you're into them for $149. For that account size, they give you a drawdown of $4,500. So it's essentially like going to TD Ameritrade, handing them $149, and then they give you an account with $4,500 in it.
Yep.
You really can't beat that. For somebody who can actually trade, you can't beat that. And then for somebody who's learning, if you go and deposit in your own account, you're going to be limited on the amount of contracts that you can trade because there's a margin requirement intraday. And then if you want to trade overnight, there's a margin requirement that you have to do for overnight trades. It's very, very expensive, by the way, for the NQ and the ES if you're trading in the minis. And you're just going to lose that money, frankly. I mean, if you've never traded futures before, that money's as good as gone. And you might as well try to learn on something where you can start for as low as $49. I mean, Topstep had a deal where it's like $4.50
Oh my God,
per
they run
account.
deals all the time. It's crazy.
It's insane. It's absolutely insane. The barrier to entry for these things is so low now, and you get real market experience. If I had access to this when I first started, you heard how much money I blew when I first started trading, but thankfully I had the means to cover that type of spending in an account. But most people, like, if you're going to be trading, you should be doing it on somebody else's dime. And with these prop firm companies, that gives you that opportunity to get real market experience, whether it's on a sim account or not. Real market experience. You're trading with real simulated fills that are as close as you're going to get to real fills. And it's something that is just, people are in a very lucky spot compared to what I started with 10 years ago. I wish that I had access to this 10 years ago.
I'm the same as you. I lost 40 grand in the first year and a half, torched it.
There you go.
No mentorship, just torched it. And now looking at the scene, if you would call it that, right? It's unbelievable how popular I actually worked at a prop firm, T3, for a year and a half, which is a traditional prop firm in New York. And even now comparing that to this, it's just unbelievable with this low cost to entry. I mean, look, you or clearly have entrepreneurial success. We look at things at the bottom line. And I think most people, unfortunately, don't think about things as entrepreneurial ventures. But trading is a very entrepreneurial venture for so many reasons we don't need to go into. But at the end of the day, it's all about your bottom line. The same way you sell your service, the same way as if you're going to spend money, when are you going to make it back? Well, risk reward wise, there's much more risk when you fund your own account and trade your own account versus if you were to take that same smaller risk and start trading with Topstep or another firm. And I really like the way you put it. So everybody, please remember it like this. You're buying drawdown, because when you get to XFA, and we're going to get into this in a second, you start at a zero balance. You have to build the buffer, which everybody sees on your streams. You've got a nice buffer in there, and that helps you with more size. So you have to earn your size and prove not only to yourself, but to the firm that you actually can manage risk, right? I don't ever like to say, prove you can trade, prove that you can manage risk, right? Because at the end of the day, tell me your opinion on this, Rips. Are we trading on the NASDAQ and the ES, or are we really just trading our time? Because really, what are we trading, right? I like to tell people we're risk managers, pattern recognizers, whatever you'd like to say, right? Depending on your trading style. But at the end of the day, you're just trading your time and your money for a potential return. And the way that we should be looking at it is lowest cost possible for maximum return, which I agree with you 100%. It's in these funded prop firm combine things. So let's talk about, let's just jump right in, because I think a lot of people now kind of get an idea for your background a little bit and your story. I want to talk to you about tactics. So before we get into XFA versus combine, because I'd love to hear your advice for the guys on that, talk to us about just your principles as a futures trader. Are there any things you live and die by that you could share with the audience, or you would maybe tell your younger self when you first started trading futures?
Well, price action's king. I focus on price action more than anything because that's the market giving you all of its information. Everybody can place orders in the market. You can have resting orders all over the place, but until those orders actually hit the tape, nothing really matters. And that's all we have as traders to look at. We can see where potential orders are resting there on the dome, but until they actually hit the tape, and that's what I consider as real price action, then the market's not really telling us anything. So you have to wait for that price action to happen. Once you have that, you're using that as market information. And, if you're looking at charts and everything, that's generally in the past. So I like to read order flow. That's one of the best things that I pride myself on as a futures trader, is the ability to read order flow. And something that didn't really come easily. It's something I spent a lot of time to become proficient in, but I would say price action is paramount for me.
I love that. Can you dive into that a little bit, though, about how you became proficient at reading the price through the DOM? Because I think a lot of people are very intimidated by that.
Oh, 100%. And it's one of those things where you just have to jump in. You have to start doing it, and you have to start seeing what reacts. The one thing that I recommend to people that they should be doing the most, whether you're trading just on a traditional dome or if you're trading on something like Bookmap, which is what I use, you want to find a way to either find a recording that's built into the software itself, which you can do on Bookmap, or record your own screen with obsproject.com. It's a free piece of software. You can record your screen, and what you want to do is you want to record what the dome or the time and sales, or a mixture of both, what is going on during certain types of price action in the market. So for me, that's what I would do. I would intently study key areas of price action. And in my case, it was Bookmap. I've been using Bookmap for years and years. I've booked well over 10,000 hours of Bookmap now. Wow. And I would record certain times of Bookmap. I would record every single day, but I'd go back and watch my recordings of Bookmap during key areas where I could see, with the gift of hindsight, I know that the price is going to do this, but what did it look like on the depth of market while this was happening? What did the tape look like? What did the time and sales look like? And then just conditioning myself, trying to feed that as much as I could into my implicit memory so that I could have good pattern recognition the next time it would happen, and my implicit memory would kick in, feel that spidey sense, those tingles and jingles starting to kick off. I've seen this before, and then starting to attack it.
The same way an amateur trader would use an indicator or maybe something on the chart and say, okay, every time there's a big move, I get this certain thing to happen. Where they could do that, you took it directly to price, which I think is a much smarter move. How do you see the DOM versus the time and sales? Because now on Topstep X, they have both of those. I'm curious for myself, which one do you like more? Can you use one more than the other? I'm sure you're going to say the DOM probably, right? But how do you use the time and sales that they show you there?
Well, what's really interesting is I'm a musician. I play multiple instruments, but nice. My favorite instrument is the drums. So I like to think that I have really good rhythm. I think some people are born with it. Some people are not. I've always been gravitated towards the drums, and I used to beat on pots and pans when I was younger because I couldn't afford a drum set. So I've always wanted to be a drummer, and then finally I was able to get my first drum set. But I love rhythm, and I think that when you're looking at the time and sales, you're focusing on a certain rhythm of the market. There's a certain the way that those orders are coming out. And then when there's big lots spitting out, and then they're kind of hesitating and get up to an area of price, and all of a sudden we run out of buyers and nobody wants to buy it anymore. And then all of a sudden you start to see these sellers cascading in. So it's a mixture of both. Time and sales is the heartbeat of the market. It's the rhythm of the market. And you have to have a certain feel for it that you get by committing it to your implicit memory after watching it for so many hours. And then there's the dome where you're seeing the resting orders of how are they pushing and pulling liquidity. And then once we get to those price areas, are we interacting with it in a way that's feeding into this heartbeat of the market?
I love that. I actually am a musician as well. I played piano since I was 4, and I was a DJ.
Oh man, awesome.
Before I was in trading, my first business was DJ. And I haven't picked it back up yet, but now that we got the new crib and I got some space, I'm going to set the DJ thing back up. Because I think you need those outlets. Are you still playing music? Are you still jamming?
Oh yeah. Yeah, I have a studio in my house here. I got all the guitars up. I got the drums. I got it. Yeah, I love it.
Oh, all right. So if I ever make it out to California, we're jamming. Sounds good.
Awesome. I love that.
The internet would love that, bro. You and me make a video. Traders,
we got to set that up.
Trader rock band, bro. Trader rock.
Be a lot of fun.
So no, that's really good information about the DOM and about the time and sales. And like I said, I think people are intimidated by it, but like any entrepreneurial venture, again, when you're intimidated by something, there's probably opportunity there, even though it seems a little scary. And sometimes the best thing to do is just jump in. So I love that
I'll be
advice.
candid. It took me like for the first year that I was reading price on specifically Bookmap, because that's the tool that I really committed to, because I said, I want to learn how to read tape. And what's funny is that I didn't even know Bookmap existed. I was out in my gym working out and I'm sitting there and I'm thinking, what could I develop? Because I wanted to hire a developer to create a tool for me, because I was visualizing price in a certain way. I'd said, candles only show you so much. You have candles and then you have volume candles below that in a general chart pattern. And I wanted to see, okay, at this part of the candle, how much volume has been experienced at this part of the candle. And I envisioned this thing. So I went to Google and I started searching, and there was Bookmap. It used to be called like X-ray Bookmap, something before it was just called standard Bookmap. And I started looking at it. I said, that's exactly what I was thinking of. And so for me, I just said, okay, that's exactly how my mind works. That's what I envision. I'm going to start using this tool and I'm going to commit to it. And I'll be honest, it took me like a first year where I thought that every single month, I thought I was getting better and better at reading it. And it just wasn't there. It wasn't there. I'd get so many false positives, like a year into it. We're talking thousands of hours at this point. I'm a year into this, right? At least 1,000 hours. And I'm sitting there and I'm watching it, thinking that I'm knowing what's going to happen next. And I'm just throwing false positive after false positive, just tanking money. And it took me at least a year before I started to feel, okay, I'm starting to understand it. So my advice to newer traders out there that are watching, you got to dive in. You just got to start doing it. And one of the things that you can't rush in trading is building up your implicit memory. It's just hours of screen time, and there's no book you can read. There's no course you can take. There's no podcast that you can watch that's going to force the issue. It's just time and experience in the market. And so if you're waiting around, you're sitting there for that perfect moment, or I need to read this book, or I need to try this thing, just dive in and just start doing it.
It's great advice. Do you think that traders, especially new guys, have a capacity, like a limit for trading? For example, I see guys trying to trade all day, every day, and I don't think they're aware that their muscle memory is not ready for that. And it leads to deteriorating decisions as the day goes on. Versus if you focused in spurts in the beginning, I think you would build up that muscle, that capacity faster, and build it up the right way, build up the callus the right way rather than rushing it. What do you think about that?
Yeah, I mean, I'm all about that, because I look at my mental capital as a finite amount of spend that I have per day. And my mental capital has a certain amount in the bank every single day. And some days I'll wake up and that mental capital bank is more full than other days. And some days I wake up and it's just, I'm feeling a little sluggish, or I'm not reading the market well.
My
And maybe
kid
that
wakes me up at 4 a.m, right? And I'm supposed to wake up and trade at 8 o'clock and run the stream. That's going to be a different mental capacity, mental capital.
Exactly right. Yeah. So you have a finite amount of mental capital to spend each day. I learned that the hard way. When I was trading, I would trade small cap equities back in 2017 to 2020. It's about 4 or 5 years of trading small caps. That spent a lot of my mental capital. It did help me to understand tape a lot more. And I'll never trade that experience for the world, but I would do long sessions. I would be up at 2, 3 o'clock in the morning, my time, Pacific time. And I would be trading until 5 p.m. at night. And it was just like all day. And I was putting in the hours. I wouldn't trade it for anything, because I got so much experience reading tape and just going through and seeing how you could actually move price around if you have, if you're using big enough size. And I would never change that for the world. But I did learn how little mental capital you actually have to spend during the day. And as the day does progress, your decision-making process definitely deteriorates, as you said, and it gets worse and worse, and you make less wise decisions as the day progresses. So yes, focusing that energy on spurts is definitely a good idea, but you also don't want to sacrifice the amount of screen time. So I would say that if you're not trading during those specific times and you're instead observing the market, or at least recording your screen for review time over the weekend or something, get that screen time in, but don't spend mental capital doing it.
Great advice. So 2 more things before we go into combined and XFA stuff. What's your morning routine like? Are you a big, California hippie with the morning routine? You got to sun your balls or something like that. Like, you're laughing because there's some California guys that are on that shit. What's your morning routine? Because I'm sure people are wondering, like, does that actually play into success in this business?
I mean, I've always been big on mindfulness, big on meditation. I've been through that in my entire life. I find a lot of solace in that. I'm big on physicality, working out. That's very important to me. I get up very, very early. I wake up at 2 o'clock in the morning, but I go to bed at 8. So, I get a good night's sleep, but I'm up at 2 o'clock in the morning because I'm on the West Coast. So I'm on Pacific time. So essentially I'm waking up at 5 a.m. Eastern. I lived in the East Coast for a while, so I'm used to being an early riser. I love being up in the morning. What's great about being on the West Coast is that it's still pitch black out when you wake up. So I go out in the back of my property where I have just a beautiful view of the stars. I'm out in the sticks here, so I don't have any kind of neighbors around me, and I have just a great view of the stars, no light pollution. So I like to go out there and practice mindfulness. And that includes, it's positive self-talk. It's walking through what the day looks like, going through positive trades that I've had of recent memory. So like today I had a really good session. The day prior I had a really good session, just going through and re-experiencing what that felt like, walking through again.
That feeling.
Exactly. And there's a lot of power in that. I used to do that when I ran, other companies. I would go through, if you're closing a big deal, or if you're having a really good month, or if you're having a really good quarter, going through what that feeling looks like and trying to exacerbate that feeling and walking yourself through that and just manifesting more of that feeling. And I know that there's a lot of people out there that are saying, that's woo woo, that's crap. I don't know. It worked for me. It's been working for me. I'm big on that. I'm big on projection, mindfulness, and it works for me. And so that's what I'll spend. Go ahead.
It works so well. I didn't mean to cut you off. It works so well. I think what you think about is what you attract, right? Like it's crazy
100%.
that people make fun of the power of the law of attraction, where it's like, okay, cool. You keep being negative. That's just going to reinforce itself and do a million other negative things for you, where if you choose to look at things positively, even if every positive thing you thought about that you wanted for the day didn't come to you, it's still going to be a better day than if you did not do that. You know what I mean? So I totally agree with you. Look, Mike, you're the California hippie. I'm the Florida hippie. So we're the same, bro. You know what I'm saying? We're the same.
Yeah.
I think that entrepreneurial spirit mixed with the power of intention and the power of manifestation in your mind coming together, bro, that is hard to beat. That is why you're successful. That's why I'm successful. That's how you get it.
It's 100%. I mean, and I've met very few people that are in the same position where if they're crushing it in life, they are all saying the same thing. They're big on manifestation. They're big on positive thinking. They're big on positive self-talk. It does a lot because I have a saying where it's not garbage in, garbage out. It's garbage in, garbage stays in. And this is another reason why I limit myself on social media. If you're infecting your mind with a lot of garbage, those thoughts are going to stick with you for your day or your week or your month. If you're constantly feeding yourself positive things, positive motifs, positive energy, and you're thinking about how blessed you are and how much gratitude you have in your life, that is infectious. And that is what grows deep down in your soul, you can feel that. And for me, that's what I like to experience. I like to avoid all of that garbage, that negativity as much as possible. And that's what I like to kick off my mornings with. And again, I know it's so woo-woo and all of that, but I'm a big believer in it.
People are accepting it more. But think about it, right? One of the most powerful emotions in my head, how I feel at least, is gratitude, right?
Yes.
Life will always throw curveballs at you. Okay.
Yes.
And the people that baby their children and make their kids soft, I'm not talking to you. I'm talking to the people that know life is hard and it's going to be hard and then it's going to be good, but you got to know both sides of that coin. And the way that you can feel both sides of that is being grateful no matter what, right? When it's down and you're having a shit month, you feel grateful for still having health, still having your family, your whatever is important to you. And then when you're having a great month, you want to feel gratitude to make that high feel even better, right? On the top of the mountain, so to speak. So to practice gratitude helps, I think, balance one of the emotions that traders struggle with, which is greed, right? You are going to naturally be more greedy, force trades, stay in trades longer, try to squeeze another $1,000 out of the day when you lack gratitude. Versus like today, CPI, I had my Twitter feed is full of guys getting chopped around, right? Yeah. I had a scratch trade. I know you had a great day. I'm grateful for my scratch trade on my XFA. I'm just grateful to not lose. You know what I'm saying?
Yes.
So it's like, and some people will be like, but dude, you're supposed to be a trader and you're supposed to make money every day. And this is where I agree with you. Keep the garbage out. That's garbage. Like the people that don't understand, I don't want their opinion. So you do, I think, more benefit than not by keeping gratitude at the forefront and also keeping off of social media, because it is garbage, bro. I mean, it is a swinging dick show. Oh, you made this much money. Somebody else definitely made more than you, right? So it's like, and they're going to rub it in your face because their life is exactly how their Instagram portrays it. It's perfect. You didn't know that? Come on, right? So no, I totally agree with that. I love that you said the garbage in stays in. I really like that.
And just to touch on the gratitude thing, I used to have a big lack of gratitude in my trading. It got to the point where I was waking up, and when I'd come to my trading office, I would hate to trade. I would sit there and I would suffer through the day. Yeah, when I wasn't consistently profitable in the first 3 years of my trading, it took me about 3 years to reach the point of my plateau. And then shortly after that, I started to be consistently profitable. So about 3.5 years before I got to out of the valley of despair and finally into the part where you start to enjoy trading, which, by the way, if you're 2 years into your journey, you're just getting started, in my opinion, at least. I mean, some people get it sooner than later. But to touch on gratitude, I used to wake up every single morning and not feel that gratitude. And I started to transform what I used to think. And I would start to come to my office, and instead of feeling, oh, I can't believe I have to do this and I hate doing this, I'm going to lose again, this feels like crap, I used to say, this is a blessing, and I am so gracious that I am able to trade. And I look at working out the same thing. A lot of people, they're like, oh, I have to go to the gym. No, I get to go to the gym. I'm excited to go to the gym. I'm excited to be able to trade. And I feel very, very blessed still to this day to be able to trade every single morning. It's a gracious feeling that I have for that. And gratitude is, like you said, it should be at the forefront, and it should be remaining at the forefront for sure.
Dude, so spot on. That thought of like, man, I hate going to the gym. It's so many people. But then I've had experiences in my life with my family, my parents, where people lose, you watch people you love lose the ability to work out.
Right.
Or compare it to work. They have to work a job they don't really like because of the lifestyle they have to keep up, maybe. That's a position where I can understand why you would lack gratitude maybe. But when you're around people and you see, wow, I saw someone that was working out, loving it. Now they can't work out and they miss it. It's like, well, I better enjoy my days while I still can. Same thing for trading.
100%. 100%. Yeah. Same with trading. Exactly right.
All right. Good. Great information. Let's talk about combines. I want some tips from Rips on how to pass. I know you get this question all the time, but I'm hoping you'll give our audience some real meat here, because this is like Topstep is going to blow up. I know you're not on social media that much, but you definitely have heard whispers about all the prop firm drama with the CFDs and the Forex.
Oh, yes, of course.
So you know what's going on. So you know a lot of people are coming over to futures. So what would be your best, maybe 1 or 2 tips, maybe 3 tips, if you have it, for a guy that's taken his first combine?
Take it slow. Number one, you have to take it slow. This is, and you hear this all the time. These are all going to be platitudes, but it's a marathon. It's not a sprint. And there's nothing more true when it comes to trading. The harder that you're pushing when it comes to trading, the longer it's going to take. The people that I mentor, a lot of their problems could be solved just by slowing down. And I do one-on-ones with people in my group. They book, a one-on-one with me to do 15 minutes. And basically what happens in those one-on-ones is we go through their trading, we talk through everything. And usually, for the most part, I'd say 60 to 80% of those folks, the answer to their problems is simply just slowing down and stop trying to force the issue. Everybody's so concerned with, oh, it's this much more money until I pass, and then I'm finally to the XFA. And everybody tries to rush that process. With Topstep, you can pass an account within 2 days. But should you be passing an account within 2 days? Well, if you have 2 back-to-back days like yesterday and today, which are insanely strong price action, and you're on the right side of it, hey, maybe you pass it in 2 days. But on average, with me, it varies. Sometimes I'm trying to push the issue. But with me, generally my average pass time is like 6 to 9 days to pass these things. And that's with a 150K account. On a 50K account, maybe you can do it a little bit faster. But the point is that you should be doing this in a slow fashion. You shouldn't be trying to force the issue. You shouldn't be trying to pass these things as fast as you can, because once you pass, you're over into the funded level. And now what? If you rush that process, what are you going to do? Now that you're funded, you're going to rush it again, and then you're going to blow that account. So what you should be doing is practicing how you're going to trade once you get to the funded level, exactly how you're trading on your combine. And that's exactly what you should be focused on. Slow and steady, taking the exact style of trades that you plan on taking at the funded level and just letting it pass whenever it passes.
Great advice. Do you have a set number or a set time of day that you'll only trade? Like, all right, I traded 3 times today, I'm done. I took 3 losses, I'm done. What are your limits there on like time and maybe wins, overall trades, and or losses? What are your limits? I'm just curious.
So I like to trade. I'm a news trader. I'm an event trader. I love trading the news. So I like to be trading at 8 a.m. Eastern time all the way until about noon. And that includes the Euro close that happens at 11:30. And you're usually getting some nice, because we're in a FOMC cycle right now, we get some Fed speakers during that time. Maybe we get an auction before noon. But there's a lot of events that are happening during that time. You get the New York Open, which is really, really strong. But to answer your question about limits on trading, usually if I'm taking a couple losses and I'm feeling out of the pocket, it just comes from experience that I know that I'm not in the pocket for that day, and I'll just put the kibosh on my trading. And that generally happens through experience. But for newer traders out there, if you're not feeling in the pocket, it's going to be seen through your P&L. If you're taking multiple losses, finding a way to lock yourself out. Topstep X, by the way, has an amazing feature where you can actually lock out the account, which is incredible.
I love that. I take advantage of that. I had guys today doing it. All the guys today saying, all right, I'm up a little bit, I'm locking out. I got to lock out.
It works both ways. You don't it's not even if you're having just a red day. If you're up in the profit, it prevents you from over trading, which is fantastic.
100%. Define in the pocket for us, because I think people have heard you say that. I love that. That's probably one of my biggest takeaways from you. It's just that term. It makes sense. So define what it means to be in the pocket as a trader.
It's like being in the zone. If you're in the zone as a trader and things are working, you're reading the market correctly, you're having a trade idea, that trade idea manifests, you start to map it out on your charts, you're looking at where you should be entering, what your stop loss is going to be, where your TPs are, and then you put that trade in action and boom, the market starts reacting in the way that you saw it should, and it's working out. And if you're doing that repeatedly, that's what I call being in the pocket. Now you can kind of juggle around being in the pocket, out of the pocket, which is fine, but some days you're just locked into the market, you're reading it like you're a time traveler, and it's just like you're just locked into the pocket. So that's what I mean by that.
I love that. Do you ever find that if you have a couple of, like, let's say you make money Monday, Tuesday, Wednesday, do you cut it back Thursday and Friday to preserve the week? Do you view it like week on week, month on month? What's your view in like time?
So I stream every single morning, 8 o'clock in the morning. So I'm there no matter what. And I will either be choosing between whether I'm trading XFAs, which is the funded level accounts, or combines. If I'm not feeling in the pocket, or if I'm not feeling like I should be trading, I will reduce the amount of time that I'm trading those XFAs in the market. Just to give you some numbers, in the last 2.5 weeks, I've traded my XFAs a total of 3 days. And that's about 15 trading days that we've had, right? And I've only traded them on 3 different occasions, 3 different days. And all those days are profitable because I waited for moments in the market where I was either in the pocket or there was a really, really good setup for me to be taking. And that's, again, that comes with experience. But if I didn't run a stream, I didn't have a mentorship, if I didn't do any of that stuff, then I wouldn't have traded outside of those days because, I've done enough market experience. I've been reading the market. There's certain days where I don't want to be reading the market, right, but there's just times when you should be trading and times when you don't. Can you learn that without actually observing it and doing it and going through the grit? Probably not. And that's one of those things where you have to build up your implicit memory to see it. And you do end up developing sort of like a spidey sense where you can know, okay, it's probably not a good idea for me to be trading. There's this many events on the table today. There's way too much volatility. There's not enough volatility. You kind of judge those things and you say, I should be trading today or I should not be trading today.
And I mean, at the time of us filming this, the first week of April, even the last week of March was very tough for a lot of traders. I was moving houses,
yes.
And I was to not be at the desk because I had a lot of guys every day red. And I'm like, God, wish you just would have stayed flat. So I think that's a skill, right? And I don't think the CFD guys that were doing CFD prop firms talk about this of going from challenge or combine to funded account. It was either trade your challenge, win or loss, then hopefully pass, then get to funded and hopefully continue the streak. So how do you balance? I know you mentioned that you go between combine and XFA. How many combines are you keeping in rotation? You know what I mean? I know a lot of guys try to, get 2 or 3 XFAs and maybe they'll get one called up to live account. What's your perspective on that for the guys that are listening? How should they be going about this? Should they be trying to take advantage of the Topstep discounts and then kind of stashing those aside? Can you give any input on that?
Yeah, so Topstep actually runs a really tight ship. You can have 3 XFAs live at any time. There is a rumor that might be increased in the near future. So
yeah, I've heard.
We'll just have to see how that shakes out. So currently, as the time of we're filming here,
I'll shake down Michael when I sit with him next week. Okay, and I'll get the answer out on the podcast.
I love that. Yeah. So right now we can trade with 3 XFAs. So I always have 3 XFAs up. It depends on your financial situation. For some folks, spending $49 on a combine, that's a pricey endeavor. And so for those folks, you want to be treating that combine like exactly how you're going to be trading your XFA. And I would say treating your combine like you're trading your XFA is going to be paramount to your success, and you should always be doing that. But if you're in a financial situation where you already have some XFAs and you want to be a little bit risky on your combines, who am I to say that you shouldn't be doing that? That's perfectly fine to do that. But I like to have 3 XFAs up at all time. I was fortunate enough to be called up to the live account. I was called up in January, and I've maintained that account since January. We're filming this in April right now. I'm trying to get to the top of the top 10 leaderboard here. I'm trying to catch my boy Dakota. Coach Dakota is a fantastic trader.
So impressive, bro.
Yeah, he's up $115,000 this year already, which is fantastic. And we're only 4 months into the year. So yeah, so I like to keep 3 XFAs up. I have my live account. And then like today, I passed another 3 combines. That puts my total number of combines waiting in the wings right now to 21 combines. So that means that I have 7 full rotations of 3 new XFAs to get in the mix. I pay for them right away. They sit off in the wings indefinitely. If I am to blow my 3 XFAs or even one of those XFAs, I rotate one of those combines that has passed off the bench into XFA land, and I can trade those. I haven't had to do that because I haven't blown an XFA in about a month and a half. And I've been building up these XFAs because I want to get that balance from my XFAs transferred over to my live account. And for you folks out there who haven't been called up to live, when you do really, really well on your XFAs, the risk manager sees that. They will eventually call you up to a live account. And once you get called up to that live account, you can again have 1 live account and 3 XFAs. So you can trade those any which way you want.
What's the pro of getting called up to the live account?
I think it's more of a bragging thing. It's
That's
like
what I would thought, because you still get
having
paid out on
prestige.
XFA. right? It's prestige, it's leaderboard. I mean, they still do an XFA leaderboard, but that's what we were just talking about last week in our group. I was like, to some of we call our mentorship is the Black Shirt Club. I was saying to the Black Shirt Club guys, I was like, I'm reading the FAQ and I'm new to Topstep. I just started 2 months ago, 3 months ago. So
Right.
I'm like, what is the value add of getting called up to live if I can get paid out on XFA? I'm sure they would give you, maybe if you have a bigger buffer, more freedom in size, maybe things like that, more leniency in a couple of the rules, maybe. But other than that, you still get paid out on XFA. So really, there is not a drastic difference. Am I right in thinking that?
So, if you are a Globex trader and you get that account pumped up to, let's say, $500,000 balance, and this is not like a $500,000 prop firm balance, this would be actual $500,000 cash and equity in your account.
Yeah.
You could potentially in the Globex session make a market or bully people around. This is what I used to do in small caps. If you have a large enough account, you can do that.
Push the market.
You could push the market around because in the Globex session, especially in NQ, it's rather thin and you could end up making a market. So if you have a large enough account, you could do that. The other benefit is that you have direct access. I can text at any time. I can text the risk manager over at Topstep and I can change my risk parameters. So for instance, I could hit him up right now and say, hey, give me a $50,000 daily drawdown in my account and allow me to trade 30 contracts in a clip. Yep. And he would evaluate my trading performance and he'd say, hey, Rips, you're crazy. We're never going to do that. Or he'd say, hey, yeah, you're approved for that. And that's the benefit of trading on a live account. And you're actually trading for real. Your orders are actually hitting the tape. Whereas on the XFA account, your orders aren't actually hitting the tape, which can be a little bit of a benefit if you're trading a thin market and you want to get fills in the sim environment. But yeah, you also have the triple leverage that you can do if you're trading 3 XFAs at once. So if you put on 1 contract, you're copy trading in 3 accounts, it's like putting on a 3 contract, a 3 lot position. So there's benefits in both. And, I think there's a lot of prestige that comes with being called up to live. It means it's good for your self-confidence, I suppose, knowing that the risk manager looked at your trading, they've looked at your track record, they looked at your history, and they said, you're good enough to make it in the real prop firm environment.
Do you notice any slippage or any hazardous conditions, if you would call it that, when trading live versus XFA simulated?
It's exactly how it used to be when I traded my own money. It's the exact same thing. It's on a dormant account. I mean, it's probably different for everybody, but mine's on a dormant account, which is the brokerage. It's if you've ever traded live before, if you ever traded live money, it's exactly the same. There's no difference. But maybe people who have only traded in the sim environment, they might notice a little bit of difference. But for those folks out there that have traded on CFDs, it's not like that. The spreads are so much better in the real futures market. And I think that a lot of those folks who are trading and used to those types of prop firms are going to be very happy with trading on these futures prop firms.
There's no one, not a single person that I've sent from what we were doing to Topstep or to just futures in general, because we've been talking about it more on my content. No one has complained. Nobody's like, damn, I really want to go back to CFDs. Nobody, bro. To the point where I'm actually friends with a guy that runs a CFD firm, and they're thinking about opening a futures branch. And I said, I'm like, you got to compete with Topstep because they're going to run away with the whole market at this point. There's like,
you can't beat the spreads.
You can't beat the spreads. You can't beat the price of the challenge. You can't beat the structure. You can't, even their rules. They're built for serious traders. The consistency rule, the scaling rule to size when you're in XFA, right? So let me ask you a specific about that, because I have a lot of guys just getting their, like even just this last week was honestly our most successful week of the year. We had 3 guys in the mentorship pass their first combine.
Wow.
That's a big deal, right? When you pass.
Congratulations. That's amazing.
Yes. For them, some of them have been with me for 4 months, like doing our weekly coaching and trading every day, finally getting them over the line, which is awesome. So shout out to them. What's your advice when you get that first XFA? Do you aim for the $200 target so you can get that first payout? Do you go to micros and just trade the micros? Give me some specifics, please.
So yeah, absolutely. And what's really cool, up and coming in the next weeks or months, but right around the corner, there's going to be the micros to minis conversion thing happening on Topstep, which means right now there's a cap on the accounts where you can either trade 5 micros or 5 minis. What it should be is 5 minis and 50 micros, an equal conversion. And on the 150K account, it's 15 minis and it'll be 150 micros. So you'll have a lot more leeway. When you first get your XFA at the 50K level, you can trade a maximum of 2 contracts. That's a little bit difficult because the wiggle room is a little bit harder on trading 2 contracts. But when they open that up to being able to trade 20 micros, it's going to be able to give you a lot more leeway. So to answer your question, would you try to go for the $200? Well, it depends. For me personally, I like to guide a lot of the people in my mentorship. I like to say, if you're feeling those butterflies in your stomach, you're feeling kind of, I'm kind of nervous about taking this on because it's a whole new thing. Now it's for real. I can actually get payouts from this thing. Pump the brakes, go back to another combine. And the worst thing that could happen is you pass another combine. Now you have 2 XFAs. You got one waiting in the wings for whenever you want to use it. You have 1 active XFA. If you blow that one, hey, rotate one in, maybe go to another combine, bring another one on the bench. And it helps clear up your mental clarity, right? It helps give you a lot of mental clarity in your trading. And I think it can be really daunting for folks when they get that first XFA account, because now it's like, okay, this is for real. I can actually get payouts on this account. Yeah, I don't want to blow this account because I worked so hard at getting that combine passed across the line to get that XFA. So I'd say, if anything, goes back to the original advice I was giving. Pump the brakes, take it easy, take it really, really slow. I trade on the 150K accounts because I think that they give you the most room. I've had this set of 3 XFAs now for about a month and a half, haven't blown them. I think the prior group I blew, and then the one before that, that was the one that got me called up into live. So I'm really good at keeping my XFAs, and it's because I'm selective with my trading. And that just is, again, that's one of those things. If I'm not feeling that I should be trading my XFAs, hey, I'll go trade a combine or a group of 3 combines, because the worst case scenario is I pass and I have more XFAs waiting in the wings. So what I'd say is that if you're not feeling in the pocket, or you're not feeling that you're confident to trade, because you need that confidence to trade, maybe trade a combine, trade on a practice account until you get that confidence renewed, and then attack that XFA. But I would say not going for that auxiliary goal of, I got to hit $200 today, or I got to do this. Market doesn't give a flip what we want, right? As you know, market doesn't care what we want. If the market's going to be great that day, maybe you make $1,000, maybe you make $2,000. The market's garbage that day, maybe you lose a couple $100, maybe you only make $50, or whatever the case. Maybe you're not going to get over that $200 line. So yeah, just take it day by day. Don't look to force the target on any means. Take it trade by trade and just trade your heart out. Do the best that you can.
I like that. So you said you have all these combines in the wing. So you'll pass them, not pay for them right away.
I do pay for them. You'll pay for them right away.
Activate them, and then they'll sit there. So that way you don't have to start trading it. But you've mentioned a couple of times, and I love that. So I hope the listeners are paying attention. That's really good.
Yeah, that's a lesser known thing, actually. You can actually have an unlimited number of past combines waiting in the wing, as long as you pay for them within 30 days.
And then it doesn't become like an official thing until you take a trade on it as an XFA.
Well, so if you already have 3 XFAs, they wait in the wings. If you don't have 3 XFAs, they'll pass up to 3, and then you have to.
Got it. So they'll still let you pay for that extra one, and it won't count as a real XFA until you lose one of the 3 you have.
Correct. Exactly right.
Got it. With this copier that you keep mentioning, and I know you're on Ninja Trader, we know Topstep X has this copier, and everyone's going to have Topstep X here in the next couple of months, it seems like. So
yeah.
What's your thoughts on this? Should we be going at it? Should a new trader be going at it to say, oh, I just want to pass one. Let me just get my one. Rips, come on, take it easy on me. I'm a simple guy. Let me just get my one. Or look, man, if you're going to trade, and market's just reopened back up, there we go. If you're going to trade, put them on a copier. Trade them on a copier. What's your take on that?
Well, again, it comes back to your own personal financial situation. If the cost of combines is just a rip in the wind to you, hey, who cares? Then do whatever you want. But if $49, it's there for you, and it's, you're saying, this is kind of a lot of money for me. Don't copy trade. Take it one at a time. And again, take it slow. Your goal for these accounts should not be trying to pass them as fast as you can. Your goal for these accounts should be, I want to try to soak up as much market experience as I possibly can. And the more market experience that you're soaking up, the better you're going to do in the long term. So you look at every single challenge account, combine account, whatever you want to call them. You look at this as a learning opportunity and another page in your trading story that you can write. And I think it's a great way to get into trading if you've never traded before. But should you copy and do all that out of the gates? Maybe not necessarily. But again, if it's a rip in the wind to you, yeah, go for it. Go copy trading. You get 3 times the leverage, and it could be
and back to
more
our
beneficial for you.
And back to our conversation about the greed and the gratitude, it's like, okay, you might not like making $500 on your 50K, but if you have 3 of them, it's actually 1,500 or whatever it may be for the profit you made that day. It's multiplied, and that could actually satisfy you. So you can walk away after your couple of wins and not give them back. Because that's one of the things I see traders struggling with too, not just greed, which this is, I guess, a expression of greed, but over trading, just giving back profits in the afternoon. It's like, bro, stop, just stop.
Yeah. You know what I mean? And I think that's one of the great things about the lockout button on Topstep X is that 100%. It locks you out and it keeps you from over trading. But I think a lot of that just comes from comparison on social media. Comparison, as they say, is the thief of joy.
It is.
And it's one of those things where if you're always looking at what you made on the day and you're comparing it to somebody else, like I thought I did really, really well today. I'm not going to go out and compare that to somebody, because if I go searching for long enough, I can find somebody that made 100x what I made today easily. And that's just going to put me in a bad, sour mood. I'm always trying to find a way to feel good about what I've accomplished in the day. And I think for newer traders out there, if you're making any kind of money in the market, you're extracting even a dollar from the market, you're doing better than 90% of the field. So you got to give yourself pats on the back. You got to feel gratitude if you're even pulling $1 out of the market for the day.
So true. All right. Couple of quick fire, a couple at you here, Rips. Most influential traders to you. You did not mention a mentor while you were learning. You were self-taught, it sounds like. But is there
Yeah.
anyone that you look up to? You like watching their videos, you study them? Anybody you could name drop as a little plug?
I'm not in the social media space, but I'm a classic. I like George Soros and I like PTJ. Those are my two favorite traders of all time. George Soros, as much as he's hated for his political landscape and all of that, he is one of the best traders of all time. And Paul Tudor Jones is one of the best traders of all time. Fantastic. I mean, Druckenmiller, there's a lot of good traders out there, but PTJ and Soros are probably my top two.
Love that. Best trading book that you've ever read?
Oh man, I have so many of them. For auction theory, Markets and Profile, Mind Over Markets. For psychology, Trading in the Zone, Mark Douglas, and Tom Hogarth's book, Best Loser Wins.
That's the one. I love that one. We got everybody on that one in the last 2 years. That's a great one.
Awesome.
If you haven't heard of Ruth Roosevelt, she's got a couple of quick and easy ones. They're really good. She's not very well known. She's more hidden. It's an older book. Exceptional Trading the Mind Game and 12 Habitudes of Highly Successful Traders. Those are my go-to. They're really good. You'll like them. Check them out.
Thank you for that. I'll definitely check those out. Also, Market Wizards, Jack Schwager. That series is just it's like trader porn. It's just fun to read how great everybody else is doing and like live vicariously through those traders for the time that you're reading those books. It's a lot of fun.
100%. And I actually have a podcast I'd like you to check out. It's coming out end of April. It's with this guy, Chris Cady. He's been trading futures.
Oh, yeah.
You know, Chris. So,
yeah.
That guy knows futures, bro. It's so interesting to talk to a guy like you and me will be him, but he's got 40 something years of experience, bro. It's unbelievable. And I introduced him in the podcast. The reason I thought of that, the start of the podcast, I go, everybody, the unknown market wizard you don't know. And this is Chris, because he's got like no following on Twitter. That blows my mind. Everybody follows these Scambo, Route, whatever people, and they don't follow a guy that's been on Wall Street since futures started trading on Wall Street. Right. It's crazy.
Yeah. That's crazy. Crazy world we live in.
But Rips, listen, man, this has been awesome. And I love your energy, dude. I think we could do a 3-hour freaking top. We should have our own segment on Topstep TV. Anthony, or Michael and my guy Anthony, they're all going to see this. Dobley's going to see this, and they're going to be like, "Yo, we got to get the boys on there for a little."
We have to do a segment together on Topstep TV. We have a blast.
It would be great. It would be great, especially when you're fading me and I'm fading you. So for the sign off, Rips, any last pieces of advice that you could give to the younger version of yourself that some of our new guys could take?
Take it slow. Take it slow. This is a long journey. And you need to have a love for this game. If you don't love this and you're trying to get rich quick, run away as fast as you possibly can. This is a slow burn. This is a lot of work. This is an intense amount of work, and you have to be committed to this. If you do commit to this and you do take it slow, the reward is a skill that will serve you for the rest of your life. And that is the silver lining. If you're trying to get rich quick, get out now.
Love that, bro. I love that. Love your energy. Like I said, Rips, this has been awesome. I can't thank you enough, man, for the time. For the audience, where can they find you? I'm going to tag the Instagram. I'm going to tag the Market Clubhouse website. Anywhere else you want to send them?
Really easy. If you go on YouTube, you search Market Clubhouse, it'll pop right on up. And I stream every single morning, Monday through Friday at 8 a.m. Eastern time. Come by, say hi.
Love that. Well, for now, Rips, we'll put a pin in it. Like I said, if I make it to California, we'll jam. Hopefully we'll be on Topstep TV together soon. And I'm sure we'll do a part 2 if you'll give us the time in a month,
100%,
4 months or something like that.
I'd love that.
Awesome. All right. Listeners, we appreciate you. Make sure you subscribe so you don't miss future episodes. We've got a ton of other awesome episodes coming. Like I mentioned, we have Michael Patek coming on from Topstep in a couple of weeks. I'm sure we'll get some other Topstep guys. So as we all kind of get balls deep in the futures, it's going to get busy here on the Day Trading Show. So for now, make sure you're subscribed. Like I said, Rips, thank you very much, man. And audience, we appreciate you. We'll see you in the next one.